Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Byte show. We are shooting this episode today on 26th of May, and we have a special announcement on a weekend investing strategy. We have a limited time 2 days offer on MI ATH2, one of our very popular strategies, and you can use this code ATH2 MAY23 at weekendinvesting.smallcase.com to enter into this strategy. More details on this in the end of the video. Nifty came back very, very strongly in the last hour yesterday. Yesterday was the expiry day, and today, the end of the week, has been extremely robust. This week, we have gained ground from 18,200 to 18,500. So, while the last 2.5 sessions of Tuesday, Wednesday, and half of Thursday looked like that the market may go into a slumber mode, but the market has come back with a vengeance and has created a closing high of almost a 6 month high now, and very, very close within 2% range of the all time high. So this is extremely positive, and this is being led uh, dramatically by FMCG stocks and some other sectors that we'll talk about. So Reliance was the major gainer of the day in the Nifty heat map. You can see almost 3% up on Reliance. Hindustan Levers up 2%. ITC has been gaining a lot of ground. Britannia, Tata Consumers also up. So FMCG sector is really pushing very hard now. Pharma was doing well. GV's Lab, Sun Pharma, Cipla, and Dr. Reddy were doing well. Banking not so pushing so hard, but still not bad. ICICI Bank at 1%, State Bank at 0.8%, Axis Bank. Bank Nifty is still not, giving that lead that the market requires, but nevertheless, it is not impeding the growth here as well. IT stocks made a very strong comeback. All IT stocks above 1%, HCL Tech, Infosys, Wipro, Tech Mahindra, TCS, and some gainers in metals and auto stocks also. Maruti up 1.27%. So good gains. You can see this entire column, except the public sector enterprises, everything was up, with IT leading the rally along with FMCG at 1.5% for the day. Real estate running hard, PSU banks, pharma stocks, metal stocks. So Nifty is definitely going to make an attempt at the all-time high and possibly go higher. I think what the market is waiting for is a softer dollar index, but till that time, the market is not really stopping even then. So from that perspective, we are on a very, very strong wicket right now. And you can see on a weekly basis, metals have gained almost 5.7%. Pharma and IT are following it with 3.9 and 3.7%. So there is a kind of a sector rotation that is happening, and momentum investing strategies capture that sector rotation very well. Over the last 1 month, for instance, you've seen auto, real estate, and IT stocks doing extremely well, whereas over 3 months, real estate has really rocked the entire list with 24% gains on real estate stocks. Over the last 12 months, however, PSU banks still remain the big leader at plus 60% on that board. Mid caps made a new all time high. This is a big deal. After almost 1 year and almost 9 months or 8 months, mid cap index has made a new high. Whenever any stock or any index makes a new high, the probability that the prices will keep rolling higher are very, very high. So versus any other point, the probability at an all-time high is actually high, and it is conventionally a point where people start to fear the market. It is conventionally you know a non-contrarian bet to buy at this point. But what is the statistics around it? That all-time high stocks do very well, all-time high indices do very well. Of course, it won't work all the time, but the probability is high. Small caps have still a long way to catch up versus the all-time highs at 10,500, about 7 odd percent still to go there, but going up strongly. I think once it breaches these three peaks at 10,000, 9,800 and 9,900, I think that will be the point where it really kicks off in a big way. Nifty Bank almost closing at a all-time high, just a matter of a few more points here, and it has consolidated in this 300-point box or a 500-point box in the last 8 or 9 sessions. Once it breaks out, I think it will break out very big on this. Now, the question that we want to address today is that discretion may not be the best way of investing. A lot of people invest, even if they invest at the right time, they're unable to exit at the right time because they are in a discretion mode. And as for instance, somebody had let's say bought Nvidia, and it went from 60 to 340. Now where do you get out? Are you waiting for 500? Are you waiting for it to come down to 300, 200, somewhere? Now, in this example that we're taking, this very popular fund in the US, ARK fund, run by fund manager Kathy Woods, very, very popular figure. Now, this fund was holding huge amounts of Nvidia since, I think, somewhere around 2020-21. And they saw this entire gain, and they've sold it here, most of it near 120 odd. Possibly, the discretionary exit that happened here was, forced, that, you're losing so much money on this position, and at some point of time you have to, sort of give in. But look at what it has done to the fund itself, and not just Nvidia, but several such investments which were going up, and because they were not sold in or exited at the right time, or at the right, even at the right drop from the top, the entire gain has been given back. So imagine your fund having a NAV of 38, 40, then going to 160 and then coming back to 40 again. I mean, what's the whole point? And most people would have got stuck here actually. So discretionary investing, extremely difficult to do. Only experts, and I would say my minority part of the experts are able to do it well. I mean, we are talking about an example of a extremely popular and well followed ETF. I think their AUM runs into several 20, 30, 40 billion dollars, something like that. Extremely difficult to do discretionary investing for 10, 20 years of outlook when the stocks are moving up and down like this. Now, what happened after they sold out everything here? In the next few months, the stock has gone from near 100 to 379. Just see what discretionary investing has done. Maybe if you are in a non-discretionary mode, you may have entered near 100. Maybe you would have exited near 220, 250, and maybe you would have entered again at 225. And we run a academic study on US stocks, where we have Nvidia as one of the constituents. We have AMD as one of the constituents. So because when you are looking at it from a non-emotional basis, you will not be forced to exit or enter at the top and exit at the bottom. Also, when the market knows that a gigantic position has been built by a huge fund manager, it may sometimes force that manager to sell off at the bottom, and it will not take off till that elephant is out of the room. So this is the situation that can come around with a lot of discretionary investors. Now let's take another flip side coin to flip, the other side of the coin. That now let's say Nvidia is here at 380. What will you do now? I mean, it's at an all-time high. Everybody should sell out, right? No, but money is continuously pouring in. Maybe from a valuation perspective, it is very, very expensive. But you could have said the same thing here also when it went to an all-time high. You could have said the same thing here also at all times. So you never know what's the kind of discounting that is going to happen. Is it discounting some huge AI breakthrough coming in the next 10 years? It may go to 500, it may come down to 200. You don't know. So unless you have a plan, you will not be able to execute it. Now, coming back to the all-time high question, I'll give you another example from the local market. So this was Naveen Flooring, and it was trading, somewhere in 600 to 800 category price range in 2018, 2019. After having had a very good run up, it just went flat for a few years. Now, traditionally, people would come in at the fag end of this rally, and once they did not get that move up in the next 1 or 2 years, people would start selling off, and then this rally started from 600. It went to around 900 within a month or two. Most people would have given up here, seeing that it has come to a previous all-time high and it is not going up, it is stuck in a range, so on and so forth. So just to show you what can happen, when it went to 900, people would have said, okay, maybe it will go to 1000, maybe it will go to 1100, whatever. But just see what happened after that. This point was that point, and it just did not look back after this. From 800, it went to 4800, in the matter of next 2 to 3 years. So you need to keep your bets based on a system where maybe you will get thrown out here, maybe you would have got thrown out here, but you would have gotten again. So that emotionless part of your system will keep you into stocks that are going up and remove you from stocks that are going down. That is the point that I really want to make. But all-time high stocks definitely have a very robust probability of going up. And MIATH2, our product here, is a weekly rebalanced absolute momentum strategy. It has 10 stocks which are at or near all-time high. So it just is going with that cohort of stocks that have high probability of gains. And whenever the market has momentum, this strategy will outperform, in a good way. And the universe is very liquid, above 500 crores market cap stocks only. So for a limited time, next couple of days, you can use this code to get into this strategy. I'll provide the links also in the description. You can write to us at support@weekendinvesting.com. If you have any query, you can simply go to weekendinvesting.smallcase.com and use this code and get this through. So this is all I had for today's episode. Thank you so much for watching this, and I'll see you in the next one. Have a good weekend. Bye.